Wow, 2022, what a year. With interest rates that skyrocketed and buyer demand that basically fell off a cliff, it really put us in a situation where I think there's going to be great opportunities in 2023. I know that the media has been projecting that the crash is coming, kind of something like what we saw in '08. I was in the business at that time, and I can tell you with certainty, it's nothing like it was in '08. And we're definitely going to dive into that and show you some points on why it's not, and then my personal opinion why I think there's going to be, especially in the first quarter of 2023, great opportunities to own real estate. Personally, I currently own my primary residence and a few rental properties, and it's been the #1 wealth creator for me and my family. With cash flow appreciation and the tax benefits that you receive through real estate, I think it's the #1 wealth creator. So this is going to be the game plan. We're going to go over a couple of items. We're going to go over the data points of what I see in the market. We're going to see how to identify these opportunities in 2023. We're going to go over how to structure the deals, how to structure your financing. So those are the main points that we're going to go over in this video. Now, if you're watching this, you can definitely fast forward. If you want to book a call, we set aside a time to go one-on-one because every situation is different. There's going to be a link below to go ahead and book a time with me so we can kind of strategize and figure out how we can help you become a homeowner in 2023 or buy your first investment property. So this video is going to cover whether you're looking to buy your first home or whether you're a move-up buyer, you're looking to buy a bigger home or to buy your first investment property. So looking at this chart here, you're going to see over the last 10 years, the enormous amount of return in owning real estate. And over the last 2 years, if you look at this, it's over 39% that the homes that appreciated. So obviously there is a dip and it's probably going to go down even further, but I don't see a housing crash. Over the length of time, housing is going to appreciate as long as you're in it for the long term. So I think there's going to be tremendous opportunities to help buyers out, whether getting a credit from the seller to either buy down their interest rate, a few different items, pay their closing costs, or just simply get a better price on a home. So please don't listen to the media out there. The media is projecting that we're going to see a housing crash like we did in '08. It is nothing like that. In '08, there was a number of loans that were done that people didn't have to prove your income. With that was a recipe of disaster. And with the amount of inventory, basically builders overbuilt. And there was a supply that went through the roof with the amount of foreclosures and the risky loans that people were taking out. That was a recipe for disaster. Today, the loans that we've done in the last 10 years, everybody's have to prove income. So there is nothing like that on the street. And more importantly, right now, there's a record amount of equity in people's homes. Yeah, there's just not enough housing out there. In fact, some of the biggest companies are predicting anywhere from 1.6 to 5.2 million homes short of what we're going to need in the US. So with those factors involved, the inventory is not coming to the market where it's going to flood like it did in '08. So with that factor, and then not only that, but if you look at this next slide, I mean, there's 64% of homeowners that have an interest rate less than 4%. So those homeowners aren't not necessarily going to want to move up or get rid of that interest rate and to move up into a bigger home or buy a different house. So that coupled, it's just another shortage of inventory. So now you have Blackstone putting together, billions of dollars of funds to buy homes in 2023 to be a mega landlord. You also have JP Morgan Chase that just set up recently $1 billion fund to buy specifically single family homes in 2023. Wall Street is wanting to do this because they see it. They see it in the few years where it's coming that there's going to be a housing shortage. So that only means it's good for real estate and appreciation in real estate. So I don't see a crash. This is the data behind it. There's not this mega inventory that's going to flood the market like it did in '08. So where are mortgage rates headed? Well, because interest rates have skyrocketed, so has buyer demand, like I told you earlier. So when is it going to ease off? Well, when inflation comes down, that's when we're going to see interest rates come down. And we're already starting to see it now. The Fed has been raising interest rates since July of 2022, and the interest rates have nothing but come down a bit. That's because it's counterintuitive, because if they bring down inflation, which these are signs of reports that are coming down, interest rates will come down again. Now, when interest rates start coming down, you're going to see buyer demand come back to market. So these people that wanted to buy didn't just disappear. They either got priced out of the market or they just didn't qualify for what they were looking for based on the payment. So if you can see on this chart here, you can see that inflation and rates have a direct correlation on there. Now, the only caveat to that was in COVID, when interest rates were monetarily held down by the Fed because they were buying mortgage bonds, they artificially kept those rates long down forever, more than they should have. In fact, Jerome Powell said that it was just transitory inflation. He wasn't worried about it, but everybody in America was screaming that it was, and inflation was going through the roof. Again, Fed is behind on all these reports. They look at like 90 days in the past. They're looking at the rearview mirror. We're looking ahead and what's actually now. So right now you can tell from this chart, as interest rates started coming down is because the CPI report is starting to come down. So again, that's what's going to bring buyer demand. So that's why I also think that in this first quarter is going to be crucial to get the opportunities for you to be able to buy real estate, because as the rates come down, more buyer demand is going to come to the market. So how do we find these opportunities? How do I identify these? Well, there's a couple ways that you can do it. You have to identify sellers that either have a life event, they're struggling with a financial hardship, or that the property's been listed for more than 30 days and they haven't sold. And sometimes people just need to sell through a divorce or, again, some kind of a life event. There's a couple ways that you can do this. I know some realtors that are using PropStream, which I'll put the link below. It's kind of like a search engine that helps you niche and find these projected deals that could come up in your city. But also, again, just teaming up with the right realtor and the right lender to be able to find these deals ahead of time and to be able to structure these deals in a way that you're going to win. So that's how you identify these opportunities now. We're seeing right now on the market, people are coming in with $20,000, $30,000 in seller credits to buy down their interest rates, or as well as taking $25,000, $30,000 off the list price, depending on the market price that you're buying. Obviously, the higher end luxury market, you're seeing anywhere from $500,000 to $1 million reduction, depending on how high you go. So the percentages are way higher in that market. But again, I think 2023 is going to bring those opportunities because of interest rates. Interest rates are going to start coming down after that, and that's when we're going to see buyer demand come back to market. Another way to identify opportunities is institutional sellers. One that comes to mind is Open Door. Open Door, if you don't know who they are, you can go to opendoor.com. They were the ones that were offering cash for buyers without even listing their home. A lot of the times they were overpaying because they were playing the market, because the market was going up so drastic that they would overpay and they got stuck with a bunch of homes. So you can go to their website and see if they have any in the city that you would like to buy, and they're usually slashing prices. If it's been listed for more than 30 days, you can see $50,000, $100,000 reductions because they need to get rid of these homes that are just sitting there. Another one that comes to mind is builders. Builders have some inventory that they want to get rid of, so they're offering incentives on the seller credit like crazy, and even on buying down the interest rate. They learned their lesson from '08, so they don't want to keep overbuilding. They want to just sell what they have. In '08, as you recall, they kept building. They have an oversupply, which kind of flooded the market with inventory at that time. So how do we structure these deals? Well, whenever you get a seller credit, you can use that seller credit to either buy down your interest rate, offset your closing cost, or either have a buy down of a temporary or a permanent buy down. And I'll explain each one of those. So a seller credit can be applied to all closing costs except your down payment. Down payment is going to be required. Unless you have a VA loan, then it's 0%. You can potentially come in with no money, no closing cost. I'm currently closing on a VA homeowner in San Diego right now where he's buying $1.05 million and he's bringing in literally zero money. Why? Because he got a seller credit to cover all closing costs and buying down the interest rate. And because he's a veteran, he has 0%. So with that seller credit, what you could do on a temporary buy down, it's called a 2-1 buy down, which is the most popular one. You could also do a 3-year, but a 2-1 buy down, for example, if your interest rate today is 6%, your first year, your interest rate would be 4%, and the second year would be 5%, and the third year would go back up to the 6% permanently. Obviously, that would offset your payment by anywhere from $100 to $800 a month, depending on your price range of your loan. So it gives you that flexibility to be able to buy now with the lower payment for the first couple years, so it can help you furnish the home, do whatever you need to do, or maybe you're looking to move up in your job. Maybe you're looking to get a raise where you're going to have more income, or maybe you're going to get married. Now you're going to have 2 incomes in the household. That's what you can do on a temporary buy down. Now, the reason that there's these temporary buy downs is because all experts are predicting that the interest rates are going to come down. Now, whether that's 6 months, 2 years, or 3 years, I can't tell you with certainty, but everybody's predicting when they do, you should have an opportunity to refinance into a lower interest rate permanently. But the first 2 or 3 years is going to give you that flexibility into having a much lower payment, but it gives you the flexibility of buying a home now at a discount. The next step, permanent buy down. What that means is you can use that seller credit to buy down the interest rate on the loan permanently, but you don't get a lot of bang for your buck on that. So that money is not going to go very far like it did for a 2 or 3-2-1 buy down. So we'll help you analyze which one is best for your situation and your plan moving forward. The next one's going to be seller financing. Now, these are very limited and very rare depending on the situation, but sometimes the seller is willing to finance the deal for you, even at negotiated terms. So for example, if the going rates are like 6%, you can negotiate with the seller for 4 or 5%, and they can do the financing for you. Now, again, this is very rare. Number 2 is going to be assumable loans. So if the seller has an FHA or a VA loan, you could potentially assume that loan at that lower interest rate that they have, because more than likely they're going to have a lower interest rate than the market is today. So for example, if the rate's 3% on a VA loan and you want to assume that loan, if the seller is okay with it, so if they owe, let's say $500,000 and you're buying the home for $600,000, if you have $100,000 to put down, you can potentially come in with the $100,000 and assume that $500,000 loan. Now, why would you want to do that? Well, because that interest rate would stay with that loan if you assume it. You would have to contact the seller and the servicer directly to be able to qualify for that loan and keep that 3% interest rate. Now, another way that you can do it is a subject to, meaning that the seller keeps that loan intact and you're just hiring a third-party company to make the payments on behalf of that. Now, that's very rare, again, that the seller would agree to do that. That's something that has to be worked out with you and the seller. So with all the information that we went over today, I hope it's brought value to you and a little bit more clarity of what home buying looks like in 2023. Like I said in the beginning, I think there's a tremendous amount of opportunity to get into real estate, whether you're a first-time buyer, a move-up buyer, or you're looking for another investment property. I think the deals are there. You just need a team to be able to help you find it. If you need a realtor in your area, definitely let me know. We can connect you with one that is thriving in that particular area that you want to live in. Number 2, book a call with me direct. That way we can figure out a strategy on helping you buy. And if you can't buy now, we'll figure out a plan to get you there soon. But again, I did this video because there's a lot of information out in the media about housing crashes. And if you were to listen to the media in 2013, I mean, you would have lost out on what, 120% return, 119% return in appreciation in real estate. So the media is not always the best place to look for your information. Definitely want to dig deep on what's going on with the market. Talk to a mortgage professional, talk to a real estate professional of what they're seeing, boots on the ground. And again, I hope you found value in this video. Book a call directly with me so we can strategize in figuring out how to become a homeowner. And if you saw value, definitely forward to anybody that might need to hear this. Have a wonderful 2023. Happy New Year.